Yes, we are here with two very special guests this morning, Warren Buffett and Greg Abel, both of Berkshire Hathaway, and they're in Japan, maybe the last place you would have expected to find Warren Buffett. He's been here since Monday, and they've been busy. They've been up to a lot. But gentlemen, welcome. It's great to see both of you.
Great to be here. Thank you.
We've had a good time.
All right, so let's talk, first of all, I mean, I'll just lay this out for everybody. We have a lot to get to. We're going to talk to them about everything business-related, the economy, the Fed, what's happening with the banking system. But we really want to start with why you're here in Japan, why this trip is happening. Warren, you've spoken to a couple of outlets over the last couple of days just about the trading houses that you've purchased. Those are the people you've been talking to. But why did this trip happen, and why did those investments happen to begin with?
Well, the investments began maybe close to 4 years ago, and I was looking at company after company, as I'll do every day, and I just thought these were big companies. They were companies that I generally understood what they did. Some was similar to Berkshire in that they owned lots of different interests, and they were selling at what I thought was a ridiculous price, particularly the price compared to the interest rates prevailing at that time. And so I started buying all five of the five largest trading companies. And by my 90th birthday, August 30th of 2000, whatever it was.
2020.
And we had bought just somewhat over 5% of each company, and we were buying identical amounts. So we announced at that time that we bought this 5% interest in each of the five. I wrote a letter to the CEOs of each of the companies saying the same thing, that we would never buy, Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in. And their results have exceeded our expectations since we purchased the group. I think their dividends on average have gone up 70% or something like that. And we now own 7.4% of each of the companies, and Greg and I together, we wanted to come over and talk to them, and so we got on a NetJets plane and plug and flew over, and we have had a terrific time meeting each of the five sequentially over the last 2 days, and it's been fascinating. And we feel even better about what we couldn't feel better about the investment. And over that time, we've sold periodically yen-denominated bonds. So more or less, we don't do it precisely, but we've insulated ourselves from exchange rate changes. So it's worked out very well so far. But we'll be in these stocks 10, 20 years. I mean, we weren't buying with the idea they go next week, next month, next year. But we have had revelations about each of the companies that, Greg and I are just fascinated by it.
Right.
Was it worth the trip?
Oh,
absolutely. It's been a great trip. Warren, they've been exceptional in how they've communicated, both with their performance, but just their approach to business.
What did you learn since you've been here?
I think the thing that stands out very quickly to us is they came to the meetings wanting to build a relationship and strengthen it. So they understand we've invested in their companies, but from the very get-go, when we start the conversations with them, they come each with their own story, and it's around building trust in that relationship with them.
Meaning what? That there are other potential deals that you all could do together?
We've clearly made it, each time we've met with them, we said we very much like the core investment, but to the extent they can identify an incremental opportunity that we could do with any of the five companies, we would very much evaluate it quickly. And Warren highlighted the bigger the better, and that he'll answer the phone on the first ring.
And we'll never run out of money. I mean, they can call us anytime, and it may be that what they have interests us, it may not, but they'll have an answer, bingo, and if we make a deal, the money will be on the way, and we look forward to it, and I'm just astounded at how they're all different and they're all the same at the same time. I mean, we learned about 5 different individual companies, but it was not exactly what we expected. It was better than we expected in every respect.
People look at this and say, okay, Warren Buffett is putting his stamp of approval on investing in Japan, basically. Is that an accurate read?
Well, it was an accurate read, but it was an accurate read a couple of years ago, too. I mean, I was confounded by the fact that we could buy into these companies and, in effect, have an earnings yield of maybe 14% or something like that with dividends that would grow. They actually grew 70% during that time. And the people were investing their money at 1/4% or nothing. And the 1/4%, if they put it out for many years, wasn't going to grow, and the 14% was more likely to grow than not. And if that didn't look like something sensible to me, that's as easy as it gets. But it's turned out to be better than I thought it would be.
Are the opportunities in Japan better than the opportunities in the United States right now?
Well, it isn't one versus the other. We can do both, but we do have more money through equities. Now we own a lot of Coca-Cola. Coca-Cola does a lot of business here. Apple does a huge amount of business here. But so we do it indirectly through American investments. But we have more money in terms of equity securities in Japan than in any other country in the world, and all of Europe combined. But we just thought we like
excluding the U.S.
Excluding
and
right.
that message really resonated with them. They were surprised that Japan, outside of the U.S., would be Berkshire's second largest place for deploying our capital into equities.
Right.
Yeah.
What's maybe the most surprising thing you've learned since you were here, each of you?
Go ahead.
Well, it's interesting to us. Well, we like each other, and we learned something about each company that. I read the reports every quarter. I look at every number. I eat that up, but meeting them in person, and in the United States, 9 times out of 10, I never meet anybody we buy stock in. But this, it's true. I mean, I don't go around to companies anymore, and I prefer they don't come to us, actually. So
don't call us, we'll call you.
Well, no, they send investor relations people, and basically every company comes in and says we're the best buy in the world, and it just isn't true. It's ridiculous on its face. These people just. We read the report, or I read the reports at that time, and then Greg got interested right away. And they told us a lot of things that helped us further our understanding of how they thought, where they were going. So we came away smarter than when we came in, and that's unusual.
Yeah, I would agree, Warren. I mean, they had each their own story, and yet there were similarities, but they each had their approach to business. But the other thing that stood out to me, the more we talked to each of them, there's a lot of similarities to Berkshire. They're very much thinking long term, and they've got their portfolios, but they're thinking about how they manage the risks, and then how can they incrementally improve their businesses. And that clearly came across from each of the 5 businesses.
That's not the only thing you all have done since you've been here, too. You were meeting with a subsidiary today as well. This is the last time you were in Japan, Warren, was 12 years ago, and it was to come to the factory right. from the representatives who came to visit you today.
Yeah, I met just a few hours ago with 10 of the very important executives of subsidiary of Berkshire's that we own 100% of, ISCAR, and the accomplishments of that company have been extraordinary. And maybe 15 years ago or thereabouts, it bought an operation here in Tongaloy in Japan, and I visited that plant right after the earthquake, and it was amazing to me. And it was a chance. I was hoping to get to their home grounds,
Fukushima.
but but because of the problem of flying helicopters and everything during the season, they all joined me a few hours ago, and it's an incredible. ISCAR was one of our pride and joys in terms of acquisitions. It came from getting a 1-page letter, 1.25-page letter through the mail. And in that 1.25-page letter, the person talking to me, who I'd never heard of before, I hadn't heard of his company, he told me more than these 60-page brochures that the investment bankers would bring out. He told me how much he wanted for the business. He told me what it was like. He told me why it fit into Berkshire. And he said and a couple of other people would come over if I liked what he was suggesting, and they came and we made a deal, and got there on a Friday, and we ran into one kind of tax problem, and a fellow named Danny Goldman worked all night, and on Saturday morning he said, we worked it out, and I said, well, and you've got whatever it was, $5 billion in overall valuation, and we made a deal, and then not too many months later, Charlie and I and a couple of the Blumpkins and Sandy Gottesman, and we got on a plane and we went over to see whether there was really anything there that we'd written a check for. And it's just been an amazing company. It started with nothing, except a fellow named Steph Wertheimer with zero going into competition, located in Israel at that time, and now it's spread around the world. But it had nothing, and it was making little tools that other people made, and they already had the customers in the United States. They could buy the tungsten in China, and these guys, Steph starting it, but later with Eitan Wertheimer, and then with Jacob Harpaz, who runs it now, and is an incredible manager. They've created a business that we are extraordinarily proud of. We love what they've accomplished, and they don't stop. They just keep going. And in Japan, they just bought a 51% interest in another company that fits in. ISCAR will never stop. Berkshire will be proud of it 20, 50, 100 years from now.
And it was interesting, Warren, didn't you think that one of the managers asked specifically, how did the opportunity to invest in ISCAR IMC, how did that come to you? And you shared that story, but it's great to see their interest and how they are become part of Berkshire. And they highlighted in Japan, for example, IMC started with a small operation here 20 plus years ago. And now we have 3 businesses that we own 100% of. And we're going to go visit Tongaloy, which has a very significant plant in Japan. And then they've added 2 since, and now we own, just recently, starting April 1, we have 51% of another joint venture company. So they've been amazing at establishing a base and then continuing to grow it.
Greg, let me talk to you, because I've known you for years, but we've never had you on the program to talk about your role. You're vice chairman at Berkshire Hathaway. You've also been named the heir apparent, which we all found out just about 2 years ago at the annual meeting that was held out in Los Angeles.
Right. With our usual deft handling.
For anybody who doesn't know, Charlie Munger mentioned it kind of in passing, and so that's how the world found out. How has your life changed since that announcement?
Yeah, I would say it hasn't changed in a lot of ways, because it goes back to what I enjoy and making sure that those priorities stay in place. The responsibilities around the work, again, the relationships I have with a Jacob or the other managers really hasn't changed. There's some external forces or interest, and that's naturally going to come. But I would say, the beauty of it and it's being part of Berkshire allows me to just continue to do what I really enjoy. So I get the opportunity to work with Warren and Charlie and others, but at the same time work with all our great managers every day, and that hasn't changed.
The external interest that comes with that, what does that mean? A lot more people call you, a lot more people want to get on your call sheet, they want to be able to spend some time with you?
Yeah, that naturally comes. There's a lot of those calls. There's people in the community who maybe didn't even know, that I work for Berkshire. So you get some interesting comments. I'll get questions from my 11-year-old's best friends as to what that means, just like the question you asked. And I remind them we're still doing all the same things we did 5 years ago together, and that will be the approach to the way forward.
So how do you two work together?
He does all the work, and I take the bows. And it's exactly what I wanted, and he knows more about the individuals, the business. He's seen them all, and they haven't seen me at the BNSF Railroad for 10, 12 years or something like that, and Katie Farmer. I mean, Greg is there, and he understands each of our businesses. I mean, to have the grasp of what, whether it's Granimals or the railroad operation or you name it, it just goes all over. And Greg gets it the same way I get it. But the difference is that he likes to work and I like to sit around. And I like to allocate capital, and he likes to. He thinks the same way on it as I do, but he also he likes to meet everybody that's running the business, and he understands them, and he's probably tougher than I would be in terms of getting things done and everything, and so it's improved. It's already improved dramatically, the management of Berkshire, and. We think alike on acquisitions. We think alike on capital allocation. I mean, he's a big improvement on me, but don't tell anybody.
So what's an example? If he's tougher on you than things, what's one example where he's been tougher than you would have been? Either of you can answer that.
Well, I think, Warren grew up with all the businesses. He acquired them or they were already there. So when I came in, I had the opportunity to start from scratch. I had to learn the businesses and their industries, which means there's going to be an active dialogue with the managers. And that helps immediately, that I was able to at least have that dialogue. And then associated with that, because I'm learning the business, I have the opportunity to discuss their businesses and expectations around it. And I would say just even communicating around how they allocate their capital, how they're using it. And I wouldn't say giving them absolute requirements, but providing direction in those areas has been beneficial. I think both for Berkshire, but for them. They like that type of input.
Our managers like autonomy, but they also get lonesome. I give them the autonomy, but Greg gives them both, and he gets somewhat more discipline out of the managers with our hands-off type operation. He gets more discipline than I would get.
Is it good cop, bad cop?
No, not at all.
No.
Is it nice parent, mean parent?
No. We really get. It's just like I said, a bit of a different approach. Yeah. But what they value is a little more of that one-on-one. They don't want to just be out there by themselves, but they appreciate that, but they want the autonomy that they've always had.
Yeah. One of the questions that people have always had is when Warren is no longer running things, what would that mean? Would all of this collection of managers, who you have some great managers, a lot of different companies, how do you keep them all interested? Because for so long, it's been amazing to say, I work with Berkshire Hathaway and for Warren Buffett. Right. How do you build that same sort of rapport with them?
Yeah, I think there's a few things. So first, this has helped a lot when you have this type of transition, and I've had the opportunity to work with them. So I think we do have very good relationships, but there's no question it's not the same as working for Warren. I've understood that, and I've effectively apologized to them many times for that outcome. But they also realize that they still have an opportunity to go run their businesses, what they love and what they wake up to do every day. And that's what we're still providing both today under the current situation, and we'll provide the same opportunity long term.
So even though it was kind of an accident that the world found out.
More than an accident, you got it out of him, I think, actually. We got it
Charlie.
Oh, you got it out of Charlie. Charlie and I are not the most careful in our wording at times.
But would you say it's almost a good thing that Greg has this opportunity?
Of course. I mean, and we're so damn lucky. I mean, it isn't like I had 10 people I could choose from. There may be 10 people out there, but I know Greg, but there aren't 10 Gregs out there. That I can guarantee you. And you know, the problem for our board of directors is the day I'm not around and Greg's running it, I am not giving him some envelope that tells him what to do next. I mean, but on the other hand, Greg is not looking to retire at 65 or 70 or 75, and we don't want anybody at Berkshire that's thinking about, you know, what their package will be when they get to be 65. We've got a unique organization which now has tremendous resources, and we've got and nobody really can copy our style. I mean, in the end, I mean, where else can they get an answer in 5 minutes? You know, whether we're interested in the business and where they get the kind of freedom now. They got to follow the law in every case, and they can be more lax with me than they could with Greg. Greg just, you know, says if there's no need for them, any of our subsidiaries, to keep any cash around. We're the best bank in the world. We got $100 billion plus, and Greg's better at enforcing that sort of thing than I am.
Is there?
And they smile when he gets through enforcing it. That's the other thing. I mean, he can deliver tough instructions, at least compared to me, and when they go away, they feel good about themselves.
Greg, recently there was news made that you had put even more money into Berkshire. For a while, you didn't have a lot of money in Berkshire. You had a lot of it in Mid-American Energy and then Berkshire Hathaway Energy from the ownership structure. But recently, you increased your stake to even above $100 million of stock that you have purchased with your own money.
Correct.
Why'd you do that, and will there be more put into it?
Yeah, obviously, when I monetized the position in Berkshire Hathaway Energy, that provided an opportunity to purchase shares in Berkshire. And had I done that sooner, I would have owned the shares in Berkshire earlier. So that was always the intention. And yes, I always will continue to invest in Berkshire. I strongly believe in Berkshire. I believe in what's been created. And I strongly believe equally that we have a great path forward.
Becky, how many managers in the United States have put $100 million of their own money, not getting a share at a discount, not getting any special deal on it or anything of the sort, or having an incentive comp expert come around and do as instructed, which is to arrange it so that the CEO gets the upside but doesn't share the downside? You know, I could hardly think of a case where anybody's put anything like $100 million of their own money in and getting the exact same deal as the shareholder gets. If they make money, they make money. If they lose money, they lose money. And that's just the way we play it at Berkshire. Mm-hmm. You don't find it anyplace else.
Yeah. Did you feel any pressure to do that, or this was always the plan?
I felt zero pressure. I mean, I very much believe in what Warren said, that our culture is one that's very aligned with our shareholders. And I've observed both Warren and Charlie and our other board members, but specifically those two, that they've had their capital deployed there. But it's the belief that they're going to align with the shareholders, and that's who are their partners, and that's who they're going to take care of forever. Mm-hmm. And so it was a pretty simple decision when the capital freed up, to acquire Berkshire shares. Mm.
So you've had the relationship for years now with the non-insurance operations of overseeing all of that. Ajit Jain is responsible for overseeing the insurance operations. Right. How do you and Ajit work together?
Yeah, it's been a great relationship. And that's been a big benefit of, again, once we became vice chairs. Yes, we would talk and we'd see each other, but it's created that opportunity to have an active dialogue. So we regularly check in with each other. If there's ever an issue that'll cross the boundaries of, let's say, either it's a broader Berkshire matter, we'll both pick up the phone, whoever it's initiates with, and check in with the other to see, as we move down this path, are we each comfortable with it, and seek input. So it's been a great relationship, and a true pleasure and honor to have the opportunity to work that much with Ajit.
And Ajit never wanted to run Berkshire. Yeah. Greg didn't want to, but he's perfectly willing to do it. But it wasn't what Ajit loves, is running, a one-of-a-kind insurance company in the world, which he built himself. And and he has a lot of fun running insurance, and he doesn't really give a damn about granimals. Get right down to it. So you didn't have two guys competing for the same job or anything like that. So it's Ajit's job to develop a lot of money for us at no cost or less, and then he hands it to me and he says, "You do something with it, Warren." And Greg, in fact, any non-insurance operation, will fall on it. When we bought Allegheny was an insurance company, but it had eight other subsidiary operations. The 8 subsidiary operations, which are not necessarily small. I mean, there's hundreds of millions of dollars of pre-tax earnings there. Greg gets them. Joe continues to run the insurance operation.
The CEO of Allegheny.
But he works through. He works with Ajit. Now, Joe and I have a direct relationship too, but it just all works.
See, I didn't want to waste any time because we got Greg, and I was going to just ask Warren how far he took Creighton. Because it was really pretty amazing. And then I was going to ask Greg, is he a basketball fan? And will we continue to do that, you win money if you get all of them right, which Warren, that's the greatest thing you've ever come up with. Is there anyone in the world who could have gotten even past the second round this time? No, your money is safe. You will never pay off that money that you offer for someone to get everything right.
Joe, we had a winner for $100,000, and if Creighton had won that last game, which they should have actually, but and I'm not blaming Creighton, I'm blaming the referee. The woman that won would have gotten $200,000 instead of $100,000, and she would have come to Omaha and thanked the Creighton players personally. But next year, we're going to make it even more interesting. I'm redesigning the contest for next year because I want somebody to win the million. And of course, one time somebody came within a half a game.
And by the way, don't you offer and have that insured, or are you paying that out yourselves?
It's Berkshire Hathaway.
Self-insured.
Self-insured, okay.
And I am a basketball fan, Joe, and it'll continue forever.
Excellent. The parody is unbelievable, and that's what gets me, is that literally one weird bounce on the rim changes it could be anybody that could have been in the Final Four, and it's just so great.
It could be anybody.
Yeah, it's so great, and the parody's amazing. I mean, Creighton. I thought X beat Creighton, didn't they, Warren? I mean, I don't know. But let's move. As I said, I don't want to waste any time on this, and I just did. So take it away, Pat.
As somebody said a long time ago, I think it's Leo Roche or something, we was robbed.
I don't think I've ever heard you blame the referees before.
Well, all I know is that nobody had been calling fouls like that throughout the game. And the guy missed the shot, but he made one of the 2 free throws. And I don't have anything against San Diego State, but if that referee wants to have a seat at the Berkshire Hathaway annual meeting, to hell with him.
Okay, so let me take it back away before you get yourself in more trouble with
this. We've got a long way into having that happen yet.
Right. All right, so we're in Japan, but there's still a lot of things that are happening while you guys have been here. One of the pieces of news that came out was about a new CEO at Pilot, which is the Pilot Flying J franchise business that you all recently upped your position in. You used to be a minority holder. You just increased your position to just over 80%. And as a result, you've made some changes there, including that new CEO. You guys want to talk a little bit about that?
Sure. So really pleased with the acquisition, or taking our interest up to 80% of Pilot Flying J. They have a great set of assets and a great management team in place. The one area we did want to make a change was with the CEO, and really the focus was to bring in someone who's been tenured with Berkshire and would have a long-term focus, someone who's going to be there for 10 to 20 years or however long. Longer. Yeah. And that was really the focus. So we were able to, Adam Wright, who is a 20-year energy veteran with Berkshire Hathaway Energy, and really started his career with us back in 1996, and has gone through many different roles in our organization in the energy side, including being CEO of Mid-American Energy, one of our largest utility subsidiaries. So when this opportunity presented itself, we approached Adam to move to Knoxville and take on the role, and we're just thrilled to have him back. He'd moved on to a company for the past 2 years. We're just thrilled to have him back in the family, and I know he's thrilled, and he'll be a great leader for Pilot Flying J.
And the Haslam family is on board with this. They still own about 20%.
Absolutely, they've been extremely supportive of the transition.
Yeah, and Adam is now heading, or he will be the CEO of a company that last year did about $70 billion of revenue. That is a big number. And now, diesel was higher last year and everything.
I was going to say, wasn't it 45?
So it might be normally 45 billion, but it is a big operation. And Adam wasn't because he was born in Omaha, Nebraska, but he was born in Omaha, Nebraska. He went to the same public high school as my wife went to, and 3 of my grandchildren went to North High. That's been around 100 plus years. He had a mother that supported him in going to UNO, where he set the rushing record for his 3 years. I think he gained 3,600 yards and never be broken because they gave up football. He's a remarkable manager. And when he ran Mid-American, it was earning $700 million a year, and nobody ever heard of him. You know, there's all these people running businesses in this world that don't make $700 million a year after tax. And now he'll be moving into an even bigger position. And by the way, he's black. And how many black men or women are running operations that will do 40 or 50 billion dollars a year? And we've got Katie Farmer running the largest railroad in the United States, and no woman was ever thought. I come from the town, a railroad town, and it was unthinkable. And both of those people, Katie and now Adam, they've got the jobs because they deserve. They've earned it. Katie was at the railroad for 30 plus years, and she's got railroading in her blood. And Adam is just a terrific executive, and he worked. He had 3 jobs when he was at UNO and
University of Nebraska Omaha.
University of Nebraska Omaha. And, it's an Horatio Alger story, and to have it be in your own backyard, I feel terrific about it. But I did not engineer it. I mean, he got there, and then I learned who Adam was after he was there.
Yeah, when he was CEO of Mid-American.
Yeah, absolutely.
Learned of him.
Absolutely.
Yeah, and he developed through our company. There are some great folks that have helped mentor him, but he's an exceptional leader. Katie's an exceptional leader. We're when I think of the talent there, it's just amazing, and their leadership skills are remarkable.
But think of the publicity that people get that run a business that makes $700 million a year, or in the case of Katie, $6 billion a year.
Yeah.
And they work through Berkshire with Berkshire's resources, with our support, but they are talent, and they get it because they're the person for the job. And
Not because some DEI shareholder proposal came through?
No, nothing. I mean, we just, and I feel good about Berkshire when I look at a guy like Adam who went to North High, and 110 years, 1920, I think it started, and here he is, public schools, and he's running a place. He didn't go to Harvard Business School, and he just earned the job, as did Katie, who went to TCU and
Texas Christian?
Yeah, Texas Christian, yeah. and they had a bunch. BNSF happened to be particularly interested right there, in the same area, and I think she started working for us when she was still in college. I mean, so I love the stories of these people, and they don't get a lot of publicity like other people may get, but boy, do they ever do the job.
Yeah, both Katie and Adam had internships with us.
Yeah.
I mean, they came in as interns and now are CEOs of two important businesses for Berkshire, so couldn't be more proud of them.
While we're talking about the railroad, let's take this a little more broadly. Greg, you've been working with the railroad for a long time and seeing what's been happening there. There have been a lot of questions raised nationally since the derailment of Norfolk Southern in Ohio.
Right.
A couple other derailments that have happened since, but that one particularly because of the chemicals involved. There's been a debate that's been taking place around the country. Is this a Norfolk Southern problem, or is it a broader railroad issue? What would you say to that?
Yeah, I would say it's a railroad problem now, specifically now. I mean, we have to take on the challenges that we've had some significant events, and our team at BNSF they take. I know within the moments of knowing of that accident, they're trying to understand it, but also lessons learned, and we recognize there'll be certain actions that come from the federal government out of different agencies, and we'll be very respectful of that in sharing our experiences and figuring out, the goal is to have a safe railway both for the consumers and the communities we operate in, and ultimately also for our employees. So there's no question there's lessons to be learned for the industry as a whole, and there's room for improvement.
On just a business basis, we would rather not handle hazardous materials. We are a common carrier. We're required to carry, whether it's chlorine or you name it, and we've got to do our damnedest to do that as safely as possible. But there literally were something like close to 1,000 derailments.
1,000.
I mean, you are running huge trains, 120. Cars or maybe, and it's big, heavy stuff, and they go around curves, and they go in 100-degree weather, and they go in 0-degree weather, and the record of the industry as becoming more safe is dramatic over time, but every day you have to think about making it safer. I mean, Katie would tell you that it's unacceptable to have anybody die, and for example, but people walk along railroad tracks. Some people commit suicide on railroad tracks, and just imagine how traumatic that would be for an engineer. He can't stop the train, and he's blowing his whistle like crazy.
Right.
Somebody decides that that's the way they want to go. Railroading is a tough business, and it's a lot better than it used to be. It'll be better 10 years from now and 20 years from now, and they'll never let up at BNSF, I can promise you that.
No.
Some of the blame, though, has been put on precision railroading and on the idea that Norfolk Southern in particular, if you listen to some of the railmen there who have issued complaints about it, saying that, I was reading one guy's testimony who said that in the 20 years he's been there, and again, this is Norfolk Southern, not Burlington Northern, but precision railroading is something almost all the railroads have taken a look at. Saying that in the 20 years he'd been there, the safety times had gotten shorter and shorter in terms of allowing inspection for every car that went through, going from 2.5 minutes to 2 minutes to a minute and a half and even less. Is that a concern? Is that something that happens at BNSF as well?
I would say that, listen, everybody's trying to become more efficient and all the time as we operate the railroads. But if you look at the safety records, for example, equipment failures, definitely at BNSF, we see improvement year after year in that area. And there may be blips due to a very specific event. But the team as a whole, they start with prevention. How do we avoid the problem right at the front end? And then you move to detection and you're saying, okay, if we do have a problem, how do we, identify it early and address it? And then you hope you're not responding. But you create a culture that you're going to constantly focus on the three of those. And that will create a safer work environment, both for our employees and for the equipment they're moving and for the communities we operate in. But it is rotating equipment. Things do go wrong. And that's why that prevention and detection becomes so important. And I think we have a very strong culture around that in BNSF.
The quarterly report I get ever since we bought it, but continuing under Katie, it begins with safety.
Right.
And it gets around to the operating ratio, net income, all that. But it starts with safety. And, it's an outdoor exercise. I mean,
Yeah.
We've had all, you deal with hundreds and hundreds of millions of ton miles moving. I mean, it's you have problems if you have trucks, you have problems if you have airplanes, you have problems if you have barges, you have problems if you have railroad. It's gotten safer dramatically over the years.
Right.
Yeah.
And all those risks covered.
Yeah. And it's amazing. We are carrying, now there was much more passenger traffic in the past, but we are carrying more ton loads of freight in the railroad industry than right after World War II, and we've got 1/10 as many people that are needed to do it, and they're doing it more safely by dramatic measures than existed at that time. But every day, they're worried about it, and to say that there will never be any more derailments is just plain crazy. I would rather not be carrying what they call hazardous materials, but they are going to be transported in this country, and the shippers decide what is the best method of getting their product to market, and it's if they're on BNSF or if we're a handoff from Southern or the railroad. I mean, we carry them, and I can tell you that Katie Farmer and her predecessor CEOs, they care about safety. But will we be perfect? The answer is no. It just isn't going to happen.
You won't be perfect. Would your response be the same as what we've seen from Norfolk Southern?
I think they would handle it terribly. Yeah, and we connect with them in all kinds of ways.
Right.
I mean, the amount that we hand off or get received, and it comes to us, and it's the way the American system is developed in railroading. But I don't know the person personally, the CEO or anything, but they were tone deaf, and I don't think they're necessarily bad people or anything of the sort, but their response should have not been the same way. I mean, we had a derailment not long thereafter.
Right.
I mean, it was either going to be Katie or it was going to be Greg, that immediately got on a plane and flew there. I mean, and looking back now, I'm second guessing somebody. I've made so many mistakes in my life, but looking with the hindsight, CEO of Norfolk Southern, I mean, if he got in there and drank the first water and said we're going to do whatever it takes to restore your life as it was before this happened and everything, that's the way to behave. But I've done a lot of things that I'd rather have do-overs on too. So I don't want to claim my responses have been perfect in every instance either. But I sure hope we don't do that ever at BNSF. I'll put it that way.
Right. All right, so Greg, let's talk about where you spend the most of your time. Obviously, BNSF and Berkshire Energy are two huge areas. How much of your time do you spend with Berkshire Hathaway Energy?
Yeah, it would be similar to what I spend with BNSF, except I still have a lot of strong relationships in that industry. So a few years ago, we acquired some assets from Dominion Energy, a great set of gas transmission assets in the northeast part of the United States. That's through a strong relationship I had with the prior CEO, Tom Farrell. And so I've maintained those relationships. So inevitably, I'll spend more time on energy, say, than a BNSF. On the general matters, it's equal. But there are other opportunities that I'm just within the energy space, and that's where I came from. So inevitably, I spend more time there. But and then I try to cross our businesses. I mean, our top 12 businesses account for 86% of our underlying cash flows in the group. So it's pretty easy to know where you should be spending your time. At the same time, as Warren touched on earlier, I do know all the businesses and as best I can, and the CEOs and a large part their management team. So it's not that the rest are ignored, but the time is prioritized across those top 12 businesses.
Greg has lived in Omaha in the past, but he lives in Des Moines now, and he was in England. I mean, he's gone wherever it was needed in terms of the predecessor company. But he has found apparently some little area in Des Moines where there's 48 hours in the day, and that's the only explanation for how he gets everything done that he does. Maybe it'll only be a couple of blocks, but I want to find that place.
We have a lot of great members in our team, as we all know, that allow a lot to happen. But yeah, and that's a good point. I mean, you sort of, in the end, I go where someone's either requesting some input or a discussion, and of course, I know, like I said, the large ones. But if someone else calls and says, "Hey, we need to discuss something," I'm going to talk to them that day or very, very quickly.
A big part of Warren's job is also capital allocation.
Right.
And right now, Warren and Charlie and Todd Combs and Ted Weschler are all responsible for allocating capital. Yeah. Obviously, you've done a lot of deals in your day too.
Right.
What kind of relationship do you have with Todd and Ted? Do you talk to them about capital allocation at all? Is there
Well, I pay attention to what they're doing, but in the end, I think it's much like Warren does. They run their own portfolio.
Yeah.
So I watch it with interest, and I don't really know who's doing what amongst it, but we all have a pretty good idea of what Warren is doing versus the two of them. So I'll do it to mainly observe and pay attention and learn from what they're doing. And I may ask them, that was really interesting, what triggered your interest? But that's the extent of it. And outside of having relationships with both of them, which are important, that's their portfolio, and that's the way it'll always be, and they'll manage it accordingly.
Do you like capital allocation?
He's terrific at it. But my job, the job of any CEO of Berkshire, is the job of capital allocation is their job, and the chief risk officer is their job, and you can't get rid of it. I mean, if you aren't willing to assume that responsibility, forget it. You shouldn't have the job. Now, Greg's got all kinds of ideas and everything, but it's my responsibility in the end. It isn't. And it'll be his responsibility when he runs it. I mean, it just, the idea that you have this committee and a risk committee and all that kind of thing. I think that's kind of crazy myself, but there are rules, for example, in banking that you have a risk committee, and the CEO is the one that is going to get you in trouble.
Or keep you out of it.
Right, keep you out of it. It's up to them to identify the risk and own it. And we've got that culture. And I talked about that responsibility to the shareholder. But with that comes being the chief risk officer, allocating the capital properly and prudently. And then incrementally, we have our business operations, but our managers know what to do. But keeping them within our level of comfort. And with that, what we really want to create is a company that's an asset to America and never a liability.
Do you two have discussions about risk management? Just because, Warren, you've been somebody who's been great at this over years and years and decades of kind of seeing risks far off on the horizon before anybody else did. Do you guys talk about stuff like that?
It's my job to think about risks that nobody else thinks about. I mean, it's very easy to read a little thing in the front of the 10K of every company about the risk. It's the ones that aren't in there that one way or another are going to bite you. And I've got 99% of my net worth in Berkshire, but I've got all my relatives in. I've got everybody. And if I thought that I wasn't going to be able to do a decent job of managing the risk, a better than decent job, I'd be crazy to take on that responsibility. Why in the world I've got all the money I need, so why should I do something that could destroy me internally and my sisters and my cousins and all these people, unless I felt that I could do the job of managing risk really as well as anybody can do. And it is a complex organization, and I worry about things nobody else worries about. But I can't solve them all. I can't solve it if the pandemic starts. But anything that can be solved, I should be thinking about that. And Charlie thinks about it too. I mean, we've talked about it forever.
Well, we're going to talk a lot more about this in the next couple of hours, what you see out there as the risks. But Greg, we want to thank you very much for this time and for sitting down with us. We really appreciate it.
It's been great, so thank you very much.
Thank you. Again, Greg Abel, who is vice chairman of Berkshire Hathaway. But Warren, in the meantime, this is the first time that we've gotten the chance to speak with you in a very long time.
As they say in England, I've gone quiet.
Yes, you've gone quiet, but there's been a lot that's happened, and a lot that's happened recently in particular. Problems in the banking sector. Your name kept coming up as someone who was in talks with the administration potentially to step in and do something with some of the regional banks, with some of the bigger banks. There was a lot of confusion around it, but can you tell us what happened? Were you talking to the Biden administration about problems with the banks?
I never talked to the president. I've never called the president in my life, but I have talked with people that from time to time that work around the president. That's been true for administration after administration, and I don't talk about what I talk with them about.
Would it be fair to assume that you've spoken with them recently? When these, I would say,
the president?
Not the president.
No.
People around the president. Let's say people in the administration.
I haven't spoken to anybody that recently, but I've spoken with people, and I've spoken with people around administration. But generally, they call me, but not 100% of the time. I mean, I would feel free to call a member of the administration. I would never feel free to call the President of the United States.
Okay, so let's talk about what's happening in the banking sector right now. Is this a banking crisis? Is this financials in turmoil? Is this banking crisis 2.0? What would you call what we've been seeing happen?
Well, I would say that some of the dumb things that banks do periodically, have become uncovered during this period, and as one of the banker told me one time, he says, I don't know why we keep looking for new ways to lose money when the old ones are working so well. And they made the same mistake, some banks, in this period by they haven't made as many mistakes. They expect to make some mistakes in making loans, but they haven't, and particularly if you're getting into credit card loans, I mean, that's just part of the game. But they haven't made it the same sort of mistakes that they made back in 2008 or 9. But they have mismatched assets and liabilities, and bankers have been tempted to do that forever, and every now and then it bites them in a big way. And it's just amazing to me that banks can make presentations to financial analysts and everything, and if one bank bought a bond at 100 and another bought it at 96, and they both held a maturity. One bank carries it at 100 and another bank carries it at 96. I mean, it is accounting procedures have driven some bankers to do some things that may have helped their current earnings a little bit and caused the recurring temptation to get a little bit bigger spread and report a little more in earnings, and it ended in a result you could predict. You couldn't predict when it would happen, and then once they start looking at one that does it, then they start looking at others, and pretty soon, that everybody is in a position of looking at a number that nobody looked at when it was it was presented to them a year ago. If you read the 10K or anything of the sort, but the banks did not call attention to what they were doing when it was going on, and I would read investor contact when they would have meetings with financial analysts or the people who follow banking, and nobody even brought up the point virtually. And believe me, if we've got a $50 billion loss or something at Berkshire, we would expect people to know about it. And it's happened before. It's happened this time. It'll happen again someday.
Did you see this? You were reading through the reports. You followed all these banking earnings that were coming in. So you noticed it. You saw it?
Sure, I noticed it.
Is that why you sold so many of the banking stocks you owned?
We sold a number of banks. I mean, we had held some of them for 25 years, but I don't like it when people get too focused on the earnings number and forget what my view is basic banking principles. I'm not going to get into naming any names or anything like that, but it happened to varying degrees throughout the industry. And the politicians say, well, the big banks did this, and that isn't true. I mean, I know who has been holding long-term instruments, and if they let's take commercial mortgages or something of the sort, they carry them at cost basically, and they can't sell them at that cost. And it's important that banks retain the confidence of the public, and they can lose it, in seconds. And we saw a country that was not worried about banks, until about Wednesday or Thursday of the week when Silicon Valley fell apart. And then all of a sudden everybody was worried about it all over the country. And the interesting thing, of course, is that it will not cost the government a penny. I mean, people think that, that somehow the government's going to get hung up with us. The FDIC is in effect, a very peculiar mutual insurance operation that is run by the government but is financed by the banks. And FDIC had $120 billion or so at the start of the year, and that's all money that banks have paid in, less what the FDIC has had to pay out on losses. If the FDIC has to pay out $250 billion this time or $300 billion, they just assess the banks more. And they don't do it in a very business-like manner because the public has the impression that the FDIC is the United States government and that so on. And of course, they do appoint the people, but the costs of the FDIC, including the cost of their employees and everything else, is borne by the banks. So banks have never cost the federal government a dime, but that the public doesn't really understand the whole FDIC thing, and the comments of public officials confuse it and the issue enormously. Somebody ought to write. I mean, the FDIC was set up to operate on, I think, January 1st, 1934. You'd think somebody would have gotten through to writing what's the essence of this FDIC, which was a fantastically good development of the New Deal. I mean, 2,000 banks failed in, I don't know whether it was 1920 or 21. Well, there's only, I don't know, something less than 5,000 banks in the United States. And I mean, it was a paralyzing thing to have a bank failure in this country. And my dad lost his job in 1931. He lost his savings. And it was because a bank failed that he worked at downtown in Omaha. And people shouldn't be worried about losing their money in the deposits they have in an American bank. And today they have no reason to worry. But the message has gotten very confused, and people don't really understand how it all works. And politicians can make hay out of it, and all kinds of things. Bad things happen when people don't understand some major institution and who actually bears the costs and what the responsibilities are. And nobody is going to lose money on a deposit in the U.S. bank. I don't know about the rest of the world. I don't know. I'm not that familiar with it. But it's not going to happen. And that message has gotten mixed up.
Well, look, the message has gotten mixed up because, and Andrew's got a question. We'll get to him in 1 second. The message has gotten mixed up because the government no longer has the authority to back up all deposits without getting the explicit okay from Congress.
But they'll get the okay. I mean, you can say that that we're going to hit the deficit ceiling. I mean the debt ceiling, and everybody makes hay out of it politically and everything. We're going to change the debt ceiling, and the unnecessary apprehension, commentary, everything that's caused by the fact that people say, well, the law doesn't allow the federal debt to get above X. Well, they're going to change it. And what happened with the failure of Silicon Valley and then signature thereafter, understandably, the Federal Reserve says we have this much power on a Sunday. Understandably, the FDIC says we have this much power on a Sunday, which is an accurate statement. And the President of the United States the next day says that your deposits are safe. And he's absolutely correct, but you have to change the law. And the President of the United States can also say that the United States is not going to let a debt ceiling mess up the whole world. And that's true, too. But it wasn't technically true in the sense that they would have to go to Congress. And then Janet Yellen, quite understandably, said, well, we won't change the rules without coming to the House and Senate and so on. And the public gets confused when they hear that. They're both essentially right. Secretary Yellen is right. The president is right. But it could have been added that the American public is not going to lose, no American depositor is going to lose any money in their bank, whether they got $250,000 or more. But if that change is needed, we'll make it. And besides, the other banks are going to pay the cost of it. And the messages get a little garbled.
Andrew's got a question, too. Andrew?
Well, hey, thanks, Becky. Hey, Warren. To that end, I think there's the issue of individuals who have money at banks, and then there's companies who have payroll at banks, and whether you would advocate for effectively not just this implicit guarantee, but an explicit guarantee that covers everything, and what the implications of that are, just for the risk that banks may take as a result of knowing that it's guaranteed, and also what the cost of effectively you are in the insurance business. If we were to insure every deposit across the entire banking system, what that would do to how much capital would even be in the system, if you will, and available for loan.
You basically have a mutual insurance company, and they of a very peculiar sort, and the ability to pay the assessment. I think the assessments are like $10 billion, or maybe that was the total revenue of the FDIC. But if they need $30 billion or $50 billion, it won't be the federal government that will put in the money. It will be banks, and I don't think that's understood. Even though, well, originally when it started in 1934, they had some different rules, and you didn't even have to belong to the FDIC. So it's evolved in a way. It's evolved like Social Security, where people sort of got a notion in their minds, and the politicians sometimes used it, the demagogue version of things. And in the end, it's like saying the Social Security Trust is going to run out of money and therefore won't pay people. Well, I will. Well, here's the offer I will make. Actually, I like to make bets. Charlie doesn't like to make bets, so I won't frame it exactly as a bet. But I will be glad to put $1 million of my own money in the bank or any place else actually that anybody takes a differing view takes, and have them put $1 million in. And at the end of the year, from when we do it, if any American depositor has lost money from a bank failure, the other fellow gets to name where the $2 million goes to what charity. And if they haven't, I get
Warren,
to name it. And that's a firm offer, and we'll see who steps up.
Right. If that's the case, are the regional banks right now, the First Republics and the like, a steal from a value proposition?
No, they're not going to save the stockholder. I didn't say that saving the stockholder. I didn't say saving the debt of the holding company. People really don't understand it when they look generally at a bank. When it says debt, it's usually the fact that the shareholders own the bank on margin. They borrow money at the holding company, and that's a different game. But they should lose money. I mean, I don't have any problem with people losing money if they do dumb things. I mean, I've got a suggestion how to handle moral hazard on that subject, which we can get to in a second. But the depositors are going to get their money, and they got their money in the case of Silicon Valley on Monday morning. But they were sweating bullets all weekend unnecessarily. If they just understood how the system worked, and it's a failure of all of ours that message is really not communicated. I don't think one person in 100 can describe how the FDIC actually operates and where they get their money and who appoints the people that are working there, who pays the salary of the people. It's a misunderstood institution.
Well, are we through the banking crisis at this point?
We're not through with bank failures, but we are through the depositor. The depositors haven't had a crisis. The owners of banks may have lost a hell of a lot of money. The people who bought the debt of the holding company, they may lose a lot of money. People can lose a lot of money, but the depositors aren't. And so you don't need to turn a dumb decision by managers into panicking the whole citizenry of the United States about something they don't need to be panicked about. I mean, it is really, it's like we're thinking that I just don't know why you do it with people. We set up the FDIC to relieve the worry of people. And initially, it wasn't the same institution it is now.
But you're saying on one hand, okay, no depositor is going to lose money. On the other hand, you're saying we're not through the bank failures.
Banks can go bust. But depositors aren't going to be hurt. I mean, banks can go bust. I mean, the Continental Illinois Bank was thought to be impregnable, back many years ago. And, the Franklin National Bank, the Bank of the Commonwealth. And sometimes they go broke because they make too many dumb loans, and sometimes it's because they mismatch maturities.
Joe's got a question, too. Joe?
I just wanted Warren to get to, he foreshadowed he's going to talk about how to deal with the moral hazard. If there is moral hazard, if the banks can fail, maybe if the shareholders lose and debt holders lose, maybe there is no moral hazard. But it's been posited that you give bank managers or CEOs the notion that all their depositors are going to be protected, then they're going to keep promising higher rates that they can't deliver. And they're going to do all kinds of things because they're not worried about their depositors anymore. But you've got an answer for how to deal with that moral hazard? Absolutely.
I mean, they've got to have something to lose themselves. I mean, in 2008, all kinds of trouble was caused by the banks. But no bank executive, the CEOs that made those decisions, they all continued to live fine. They may have lost their job, but they get their pensions. So they bore no response. And then the bank later would pay billions of dollars, a bunch of shareholders' money that had nothing to do with making those decisions. So I would absolutely suggest, and I had some friends in banking. I may not have any by the time this program is over, but I would suggest that anybody that's CEO of a bank that screws up and costs shareholders a lot of money, that in effect, they get no pension from the bank. They go back to living, like a person that works on the production line at Ford or something like that. They don't deserve anything special. And I would suggest to the directors of the bank that sat there for 5 years and listened to people come in and give reports and all that sort of thing, that they get back all their directors' fees. And there's got to be consequences to the people who make the decisions, and penalize the shareholders later on by having billions of dollars worth of fines paid to the government. That doesn't deter the bad action the way if you're the president of the XYZ bank and you screw up enormously, you still live on like you did before. You've taken away any sense of real responsibility with the directors, and answer with the directors isn't have more risk committee meetings or anything like that. The answer to I've been on the board of banks, and the answer is to have the board of directors feel, my God, if this guy screws things up, I've got to give back all this money that I've gotten, $300,000 a year or whatever it may be, and pre-stock and this kind of stuff. I've got to give it all back for 5 years. Believe me, that changes behavior of the people that cause the problem. And this system doesn't get rid of moral hazard because it penalizes different people and make the decision. I want to penalize people who make the decision and have it very clear to them. And that will not be met by great enthusiasm from a lot of friends of mine. But that's exactly what I believe should be done. And banking systems are enormously important. The world doesn't work well without banking systems. And I don't know anybody that went back to flipping burgers at McDonald's or something, after they screwed up the system, in a big way in 2008 and 9. Now they did things in 2008 or 7 and 8 that really are qualitatively different and really much more reprehensible than things that people did in this period currently. But they did a lot of dumb things, and some of them sold their stock. And there's no penalty attached to bad behavior, and it does really affect the system when people lose confidence in banks.
Well, let me ask you. You again have sold a lot of your bank shares that Berkshire Hathaway holds. Should we read that as an indication that you think banking is less investable than it used to be? Well,
I'd love to own a good bank. But we owned a bank in 1969 at Berkshire, and it was one of the best run. Well, I think it was probably the best run bank in the country. And Gene Abeger ran it like I'm talking about. I mean, he was a real banker. A fellow named Morris Shapiro and Harry Keefe used to run the two big banking analyst firms on Wall Street, and they were really smart guys. And Morris Shapiro once said, "There are more banks than bankers," and you want people that understand that they are handling other people's money just like you do when you want people running, hedge funds or anything else. Like they'd handle their own money. I mean, it's regarded as very clever in this country if you set up things so that, it's nice if your investors make money, but you get very rich by assets under management. And in the banking industry, you have not connected responsibility for problems to the real punishment for that act. And that's when you get responsible
Okay, but
you get a better banking system.
some of the banks that you've sold include USB, Wells Fargo, Goldman Sachs, JP Morgan, PNC. Should we think that they're banks that aren't well run because you've sold them? Or?
No,
okay.
no. But I do think, I did think that banking could get in a lot of trouble just because of the kind of things that they did, and that I didn't like the banking business as well as I did before.
Why'd you keep Bank of America?
But I would love to have owned a bank. If Berkshire could have owned 100% of a bank, we'd love to own it. Well, we can't do it under the bank holding company.
Would you like to be a bank holding company?
Well, that means we can't do all the other things we do. So we got taken out of that in 1970. We had just bought a bank in 1969, and we had to get rid of it in 10 years. And there's, I don't argue against regulation of banks, believe me. But that particular option has been taken away from Berkshire, and I think it's probably a good idea to taking it away from corporate managements generally.
Why'd you keep Bank of America?
Pardon me?
Why did you keep Bank of America?
They invited, I invited myself in many years earlier, and they made a very decent deal for us, and I like Brian Moynihan enormously, and I just don't want to sell it. But I did sell banks that we'd owned for 25 or 30 years, and if they asked me why I did it, I told them. But and I like the people. I just think the system isn't set up quite right in terms of connecting punishment to culprits on something that's it's incredibly important that your banking system run well in the country. It just isn't going to work unless you have a banking system that works, and you don't want them to create periodic crises unnecessarily.
Okay. We're not taking a lot of breaks today, but we will take one right now. We are in Japan, in Tokyo, with Warren Buffett, the chairman and CEO of Berkshire Hathaway. He's been talking about the financial crisis, or I don't know if we'd even call it a financial crisis, but the situation in banking right now, where things stand. Warren, you had said that you wouldn't necessarily, no depositors are going to lose money.
Exactly.
But the shareholders might, and you could also see bondholders losing money.
They will in many cases, I think.
All right, so let's talk about the assets that are out there, though. You've got assets now from Silicon Valley Bank, from Signature Bank, that are now the responsibility of the government, who's trying to auction off some of these things. You've got people asking questions about what comes next if this sort of pig in the python continues to work its way down. If that's the case, commercial real estate has been brought up as an issue of a looming problem, particularly since 80% of commercial real estate loans are made from these regional banks where most of the problems have been.
Yeah.
What do you think about that?
I think that there will be problems and people anybody that's got a fixed rate locked in for a while, when the fixed rate goes away and they got to reprice it now, has got a problem. And the holder of a 30-year Freddie Mac or Freddie, they've got the best deal in the world, and they should. I love the program, but
you mean somebody who has their 30-year mortgage?
Yeah, that has the mortgage.
Yeah.
But the reason for the very fact that it's very advantageous to the person who has the mortgage means it's a very dumb holding for banks. But I also believe in the system that produces, I think, net the country is better off because but I don't want to own any 30-year mortgages myself. And the idea that if you've got a 30-year mortgage, you personally, you can call off the deal 10 minutes later, and if the bank's got a bad deal, they're stuck with it for 30 years. Berkshire cannot make the deal with our credit that you can make if you qualify for making a Freddie or Fannie Mae. I think that's a good thing for society. I don't think it's a very good investment for banks, but banks have a good enough business, if run right, that they can do some things like that, and they but I still wouldn't do it myself. And we will see people. Well, it gets back to that old story, when the tide goes out, you learn who's been swimming naked, and we actually ran into a nudist colony here. I mean, in terms of the banks all over do that sort of thing, and they can handle losses. But to say that because you can hold at maturity, that therefore it's safe. Well, what if the prime rate went to 21.5%? In the 1980s. Who knows what can happen to what you're paying on your deposits? And people really know now what they can get. The idea that you've got this kind of lazy money and people are sitting around with money and zero. You're telling them every day on CNBC, go shop around and get the best rates you can for your money. And so, unlike the physical world, I mean, in the physical world, you know how fast sound will travel. It will travel at the same speed as 20 years ago or 50 years ago, and you know if an apple falls from the tree, how long it will take, basically. But in economics, the equation changes every time because of the experience of the previous time. So things that seemed to make the mistakes of 2008 and 9, they affect how people behave subsequently, and 2023 is a different world. It isn't like light travels at the same speed or anything like that, and people have adjusted so that lazy money in 2008 doesn't exist in the same way at all, and we'll see how it plays out. But it's our job at Berkshire, for example, and in all our businesses, to not think about. You take cognizance of what's happened in the past, but you have to worry about things that people haven't seen yet, and the people that have run banks the wrong way, their shareholders are going to lose money, but the depositors aren't going to lose money. And I made that offer, in the previous segment, and if anybody's called in with $1 million, I'm still good for it.
Okay, let's go back to that for anybody who's just tuning in. You're saying that you will put up $1 million against anybody who wants to take the other side of the bet that no depositor in a U.S. bank will lose money
in the next year. In a year from now, whichever one of us has won gets to decide what charity the $2 million goes to. So charity's going to win, just like on that hedge fund bet I made a few years back. But I'm betting on what's is certain to happen politically. It isn't the law now, but it'll get changed. I will bet on the fact that the United States will not ruin the world by messing around and not finally changing the debt ceiling. And why the Congress we elect to do all kinds of things, and they're overworked in all kinds of ways. Why they spend a lot of time fiddling around on that and make hay out of it on one side or the other? Depends who's in charge. I mean, it's just silly. And I'd rather have the government, actually focus on things like they did back in the New Deal, which my dad hated, but which Social Security came out of, and the FDIC came out of. These things really improved the situation of the world, and they improved America. And I've got the advantage of hindsight, and I've believed in it, and really, since I was 11 years old, I just said bet on America and figure out a way to be in the better businesses. But even if you're in the average business, it's just the way we still work despite all our shortcomings, but we can work better.
All right, back to commercial real estate. We have had lots of investors in commercial real estate who have come in and said that this is going to be a crisis point, that the government is going to have to step in, that something should be done because there are so many commercial real estate loans that are coming due between now and 2025, and that they won't be able to get credit from the banks in the same way to renew or to, once those maturities come due, to refinance.
Well, let's say they lose $100 billion in the banking system. Most of the banks can take that loss, their share of that loss, and a few of them, because they did other things, their shareholders will end up losing the money, but the depositors won't lose money. But if you lend money to somebody and it comes due and they can't pay. You know, the old story about the banker. I never made a bad loan. Of course, some of them turned bad after I made them. I mean, and that's exactly what happens in, you know, whether it's in commercial real estate. And if money rates are 2%, or we were lending money out at 4 basis points at Berkshire to the federal government, not much more than a year and a half ago, or something like that. And if those rates change, let the person who bet that they wouldn't change lose money. I mean, that's, you know, if you make mistakes in business, there's plenty of people make mistakes. You pay for them. If you've got a big profitable business on top of it, you know, which a good many banks do, you take your losses and you keep going on. I mean, banks can take a lot of loan losses, but they can't take something that wipes out their capital and expect the world to ignore that fact.
Meaning that you don't think anything needs to be done on the commercial real estate front?
Well, I think that the people who lend too much money should take losses, and they're getting properties handed back to them now. I mean, you know, within the last month or 6 weeks. I mean,
banks are.
Yeah, I mean, they got some office buildings in Los Angeles, and you know, Blackstone walked away from something. I mean, and if you get a non-recourse, you know, everybody goes in the real estate business is told the first rule, the second rule, the third rule is never sign your name to anything. And so you have non-recourse mortgages, and they're going to walk away, and the bank's going to get stuck with losses, and maybe they'll hold the property a long time, and it'll come back. And I mean, there's all kinds of ways that if you got capital strength, you may decide, well, I'll just hold it, but that money is sterile for quite a while, and that's part of banking. I mean, you expect to lose some money in banking. It's not a sure thing on every loan, and you build that into your calculations, and then you have capital that protects your depositors from it eating into their money. And if it does eat into their money, then the FDIC, which is in effect really a mutual insurance company of a very peculiar sort, essentially spreads the losses among the continuing banks by higher FDIC assessments in the future.
We've had some people in commercial real estate who make the point that it's not just commercial real estate, but other places where the economy is turning over, where inflation is coming down, that the Fed is doing too much. What do you think of the job the Fed is doing right now?
I do not think I could run the Fed as well as Jay Powell's run. I think Jay Powell has been a terrific, and part of the job, well, look at Paul Volcker back in the 1980s. I mean, people were sending him, you know, I mean, he needed Secret Service protection and everything else. But in the end, he felt his responsibility was to do the right thing at the Fed, and he didn't give a damn about what anybody wrote about him or anything else. And I think that he's one of my heroes, and I think he's one of Jay Powell's heroes. And I think Jay Powell did the same thing actually in March of 2020 when we went into the pandemic. I think at the annual meeting that year, I said, you know, that he was a hero and he is a hero, and you have to act, and you have to act on insufficient information, and you've got an ultimate responsibility to the American public. And it doesn't mean you can stop recessions. It doesn't mean that you can turn bad loans into good loans or anything else. But it does mean that you got to keep the system working. And the system came close to stopping. If you read a book called $1 Trillion Triage, you can get it on a day-by-day account. And people don't know how close it was. And Jay Powell did not call for studies or position papers and, you know, lengthy debate and everything. You just don't do it. You act. And that's what Paul Volcker did. And I thank heavens, you know, Jay Powell was there. I mean, you could have gotten a very different result in March of 2020 after the pandemic broke out.
Did the Fed keep rates low for too long after that?
Who knows? Who knows? We won't know. I don't know what they precisely should do. Nobody does. And they follow conventional wisdom and all of that. And sometimes it works out and sometimes it doesn't. But since 1942, you know, we've made all kinds of mistakes in this country. And we'll continue to make them. But somehow the system works pretty damn well. I'd rather own stocks than bonds over many years. I'd rather own part of America than try to squirrel my money away somehow. other place I thought, maybe in Switzerland, Credit Suisse or something like that. It just, people are, they don't really get any wiser about this sort of thing. People, somebody else fire, they're going to run for the door. I mean, it's built into, fear is so easy to arouse in people. And you talk about fear about their money, and they don't really understand the system necessarily or anything of the sort, and they can actually, by their own actions, then create what they were afraid of. It's a very interesting phenomenon, and it actually, my dad hated Franklin D. Roosevelt, but so I grew up, first 10 years of my life, I couldn't get dinner unless I said something nasty about Roosevelt or something. But over the years, when Roosevelt said the only thing we have to fear is fear ourselves, he was 100% right. When he closed the banks and said, I'll open the good ones a week from then, he didn't know anything about which bank was good or bad or anything like that. But people just needed that, get an appropriate confidence. And now they've really got an appropriate confidence, because we didn't have an FDIC, and we didn't have an FDIC that was required for every bank. A lot of banks fought the idea. And now we've got a system that works, but people are still scared when they get scared. And being scared is so contagious. You can't imagine what it was like that weekend after Silicon Valley. I mean, the guy that drives me around because I can't see that well, and all he was talking was banking, and he would, what should he do? And it's unnecessary fear is a terrible thing to give people. And Roosevelt and the New Deal really wanted to get rid of that. And here we are X years later, and we've got a mechanism that's so much better than we had going in, but people really don't quite understand it. And maybe it takes the President of the United States to just go on and deliver Roosevelt's message and make it more clear to people what we really do have and what they need to be worried about and what they don't need to be worried about. But of course, if you're trying to win an election next time, you tell people, that if you're out of office or you're out of control, you tell them how terrible the other guy is for getting them into this problem. And that's going to always live with us.
So you look around and you're not worried at this point?
Well, at 92, I've got other things to worry about. No, I'm not. I don't worry about our ability. There's things I worry about. Sure, I worry about the nuclear threat. I worry about a pandemic in the future and all kinds of things. But I don't worry about them because I can't do anything about them. But I actually, that's what I originally thought my money could be best used for. But I don't know any answers now after 40 or 50 years of thinking that way. But I'm not. I don't worry about. No, I don't. I never go to bed worried about Berkshire. And how we'll handle things. If I'm worried about Berkshire, I should figure out something different to do about what Berkshire is doing. But Berkshire is my responsibility, and I think I was very, very, very lucky that Berkshire happened to be in America, and I happened to be an American. I was born in 1930, and I've been in a golden age ever since I was born. The GDP per capita is up like 6-fold or 7-fold. In one person's lifetime. There's never been anything like that in the history of mankind. And so, we love to complain about wherever we are, but most people don't work on Saturdays and don't work on Sundays. And when I was a kid, everybody worked on Saturdays. And I mean, the world has changed so much for the better in terms of how well off people are compared to any other time in history. If I'd been born 150 years ago and I went to the dentist, I mean, they'd pour whiskey down me and all kinds of, there's just all kinds of improvements. But it's man's nature to be dissatisfied. And politics does stir that up. And you've got to say, if you're out of power, that the other guy is screwing up and you could do better. And that's just built into the system. But that was the case when I was a kid, and it's the case today.
Joe's got a question. Joe?
I love his oblique references to his dad. I like that one. I think sounds like a real solid Nebraskan, though. I think I would have. I don't know. I would like to have had a couple of domestic beers with your dad. I think what I was trying to figure out, Warren, is in your long life where you've seen a lot of different business cycles and you've seen hyperinflation and you've seen secular disinflation last forever. What do you think happened this time to get to 40-year highs? It's obviously pandemic related and supply chain related, but do you ascribe anything to the Fed enabling too much fiscal spending, profligate spending by the federal or by the government in general? Do you think that added to it, the increase in the money supply, or where did it come from? Why did what engendered it this time around? And how bad is it? How long lasting?
It's fun sending money out to people if you want to stay in office and you want their vote, and that's always been a problem of our political system and around the world, and some countries have just printed it where they have billions and billions of this currency or that, and inflation is a constant threat to a country but so far the United States has done pretty well of that. Now, it's still the case that the price level is probably 15 times what it was when I was a kid. And so, but the interesting thing is, the price of the Coca-Cola is maybe twice or something like that. Main cost is the container, and the price of the New York Times has gone up 40 for one or 50 for one. I mean, it's a very uneven thing, and base commodities tend to move less. But oil was $3 a barrel when I was back when I was managing money at first, and it had been 10 cents a barrel in the East Texas situation in 1931. Now it's $80 a barrel, and I mean, I said in the annual report that Berkshire can offer some protection against inflation, but the effect of inflation can be wild. Some people, if you owe a lot of money, all of a sudden you don't owe anything. You can earn it back in 5 minutes. And on the other hand, there's just all kinds of things, but it's not a good thing for society. And I think that the United States has generally done a pretty good job of keeping inflation from getting out of control. And I think when Paul Volcker came in, that was a seminal moment in U.S. history because it was close. I mean, cash is trash, and prime rates of 21.5%, and paying interest of $200 an acre on farmland in Nebraska, when the crops you could produce would only produce $80 an acre, and it cost banks to go broke. And I bought some farmland from I think probably the FDIC, I don't know, somebody or other, that taken it over, and it was just crazy. The country went crazy because they were afraid of cash, and they just piled into things. And Volcker, who knows what would have happened if he hadn't come along? It's popular to send money out if you're in politics. If you tell every one of your constituents that they just won the lottery, and here's $5,000 or $15,000, something's going to happen. You're not going to have more goods and services produced immediately that can sop up that money. And it's fiscal policy in that case, and we are spending a lot more than. Our government is spending a lot more than it's taking in. And that's a lot of fun if you want to stay in office, but it isn't necessarily the best thing to do for your kids.
So let's talk a little bit more about where we left things with that inflation number. Again, we are with Warren Buffett in Tokyo, Japan right now. Warren, you can talk about inflation and what's coming and what's going, but We've got the CPI number coming up, and I think you probably have better information than Janet Yellen or Jay Powell, just in terms of what's happening on a day-by-day basis. You have so many businesses that Berkshire owns outright. You have so many big companies that you own a major stake in. What do you think about inflation? Have we seen the worst of inflation? Is it rolling over? Is it coming down steadily?
Well, inflation is always a possibility, and by inflation I mean extreme inflation. It's a possibility. I mean, just look at the countries and what they've done. I mean, I don't know how many times, and eventually they almost lead. Well, they can lead to terrible things. Led to terrible things in Germany, you want people to trust their money. I mean, if they really have a flight for money, the economy doesn't work. But in 1942, when I bought my first stock, I mean, we were going to pour money into people's pockets, and they couldn't buy anything. They couldn't buy cars. They couldn't buy. I mean, they couldn't buy washing machines or anything else. But they had money flowing into them, and of course, we had price controls, and we did various things. And the war ended in August of 1945, and for a little while, the fact that there was all this money sloshing around and people wanted to buy things that they hadn't been able to buy for 3 or 4 years, and women had gone to work and all of that sort of thing. And I think the inflation rate went from something like 1% in January of 46 to, by the end of the year, was running at 15% or something. I mean, if you give people a lot more money put in their pocket than that you've got in corresponding goods and services being turned out, money is going to become worth less, not worthless, worth less. We had and that's happened periodically. I mean, we've had incredible inflations in certain countries. If you look it up on search, the greatest inflation we've had a post World War II in various countries. I mean, and there comes a point when it gets out of control. It is out of control, and it screws everything up, and it's not good for society. There are certain people who profit on it, obviously, that anybody that's borrowed a lot of money, but the citizenry, it is not good for society, and government has the responsibility for making sure that they issue the currency, and it's the only thing that's legal tender, and that you need to have. I think Charlie mentioned it even on the currency is one of the great inventions of mankind. You don't want to go around all the time trying to trade your services, in terms of giving somebody eggs and trying to get back a watch and then trying to trade your watches. I mean, you want something that is you need something in a society that's legal tender, but it's important how you treat it. And the United States has been pretty good at it, really quite good. But if you look over the years since I've been investing, I mean, there's been a 90% plus loss in purchasing power.
Mm-hmm. But it sounds to me like you are more worried about inflation than recession. Is that fair?
No, I think either one can cause a lot of trouble, and recessions can turn into depressions. I mean, it is. We've got a great country, and it gets messed up by depressions. I mean, I lived through. I was born in 1930, and the Dow didn't get back to the level. It was higher than when I was born for about 5 days, and I got out of college before it got back to that point. And it wasn't that the American people had turned bad or anything else, but we got something that fed on itself, and banks failed. And I mean, you can disrupt an economy a lot easier than you can put it back together again. And we've had some close calls on that, and I think we've had some. Well, I think in 2007 and 8, I mean, I think Hank Paulson said, that we'll use the Economic Stabilization Act, which was enacted back in 1931, and all of a sudden we'll get guarantee money market funds, and it was a good idea to do. Whether he really had the authority to do it, I don't know, but he was sure the right guy in the job. So we don't want to we don't want to mess up our economic machine, and it can be done by inflation.
So how do we mess it up? How do we mess it up? Should the Fed keep raising rates? Is inflation at bay? What do you think?
Well, basically, fiscal policy scares me more than monetary policy.
Yeah. Meaning that
I think it is easier to obtain votes if you give people money, and I think that just like I want to keep my job at Berkshire, I want to get elected next year, and fortunately I have enough stock and everything. I can do it. And if I was in a super safe district, maybe I would vote my conscience in Congress. But who knows how I'd behave unless I was there. But my dad was in Congress, and I got to view how it behaved then, and I don't think its behavior has improved, since 1942 when I first went there and had lunch with Sam Rayburn one time.
So you think that Congress is going to screw it up by continuing to spend more money, and Jay Powell is going to be in the position of having to continue to raise rates?
I don't know what they're going to do, but if you ask me, the things that I think about in terms of taking care of millions of people's savings who entrusted me, that's one of the calculations I have in my mind, and I have said in the annual report that we will ride along with America, and if we can't necessarily predict how we would come out in a wild inflationary period, but it'd certainly be better than you would do in the unit of currency. And that's the best I can do. And believe me, I think about it, obviously, and we own a lot of good businesses, and the railroads will continue to run no matter what the currency does. The insurance company will continue to insure people, and Garen will continue to drug animals for kids. I mean, we are a cross section of America's economy, and we're going to behave in a way that we'll be the last person standing.
All right, I'm going to ask you one more time because I don't think you want to answer it. I know you don't want Jay Powell's job, but if he asked you if he should keep raising rates, what would you say?
I would say he should do whatever he thinks is in the best interest of the United States.
And if he said, what do you think is in the best interest of the United States?
Well, I'd say that's why I didn't ever want to be chairman of the Fed. I mean, it's a very, very tough job because you have to deal with Congress, you have to deal with banks, you have to, and the biggest problem is in the end, Congress can torpedo your job. And I'd hate to have a job where something that somebody else can do can essentially nullify any actions I take. And Paul Volcker faced that, and I looked at him one time in the 1980s. I look up like that because he was even bigger looking in person. And I said, what can you do under that exigency clause or whatever there was and Volcker basically said, I'll do what I need to do. And he says, what are they going to do? Come down and arrest me, basically, and take the Supreme Court going to put me in jail or something? He felt that it was his job to do what was right, and I think Jay Powell feels exactly the same. And actually I feel most people in that job, overwhelmingly, they want to do it, but I think some of them haven't been as smart about it as others.
Hey, Joe, you want to take a crack?
I was going to shift gears a little bit, Beck, although obviously energy prices have a huge effect on inflation, Warren, but I was struck by the article on Oxy that was in the Journal and about how much money is being spent by the company, I think with your blessing, on carbon capture. And I guess I'm just trying to figure out how you feel we should transition, how long it should take, how much hydrocarbon production we need to continue with. There are, depending on a continuum, you can find people that think we should spend $20 trillion over the next, 15, 20 years on the transition, which would obviously impact growth around the world. There's got to be a way to do this where we can continue to grow. And I'm wondering, if you think we're doing it effectively. Is Oxy a model for how we should, Occidental a model for how we should be doing it, in your view, Warren?
Well, I certainly think Vicki Hollub at Occidental is an extremely competent, good citizen of America, and I really like. She understands oil, and she understands political realities, and she understands what is happening between the below the surface of the country, and she is extremely concerned with ways to have carbon capture. I mean, but I think your figure of 20 trillion is way low. I mean, we're producing. The world needs 100 million barrels a day or something like that at present, and you've got this enormous problem that the United States put a good bit of the carbon into the air, and then they say to the rest of the world, you can't do that. And besides that, you ought to chip in. And I mean, it's a very tough problem for it seems to me, somebody that has been responsible, a country that's been responsible for putting the carbon, starts saying to everybody else, you can't have any. So it's an enormous problem. It's an ever-present problem, and you really need somebody that understands the dimensions of it and what can be done with carbon capture. But you will be producing more oil in the 5 years from now, or about the same amount. And if you spent trillions of dollars now, you'd still be needing it. You can't change the world that fast. Right.
I guess I've heard Charlie talk about it. I think he thinks that maybe some of the hysteria is overdone on the entire subject. I mean, we could spend an awful lot of capital and GDP globally on dealing with this problem. I've asked you this before in terms of your insurance companies. At this point, how much worse are your payouts for adverse weather events compared to historically for what you've seen?
Well, it's essentially nothing. And we are writing more cat cover this year, actually, than we were writing last year, because the prices are somewhat better. And actually, I don't know a damn thing about hurricanes, but in terms of El Nino or whatever it may be, it's somewhat more probable that we have a good hurricane season. I mean, a good one being a low one than last year. But there's all kinds of chance events, and that's what we insure people against. But
can you say without hesitation that you need to charge much higher premiums because these things are happening much more frequently? Because we're considering spending in terms of
we're charging higher.
Go ahead.
We're charging higher prices, Joe, because prices got too low. I mean, we're the price level for hurricane insurance is not. I mean, if you take Florida as an example, for example, and we say we'll insure against any event that causes more than $50 billion of damage in Florida, and there's all kinds of reinsurance contracts, but those have been priced well below what they were some years ago, and we didn't think we were getting paid enough, but now the prices have moved back up somewhat, and Ajit calls me and says, how much are you willing to lose in a single event, in Florida or Texas or earthquake? And I said, we can lose $10 billion and nobody else can play in that game. And so now it's not as attractive as it's been at different times, but the auto insurance, which we've done big through Geico, the average price of our policy when I went in 1950 was, I don't know, 50 or 60 bucks, and now it's over $2,000 a year. And we even the whole auto insurance industry went from pricing the stuff for a yearly policy to changing it every 6 months. I mean, we are not issuing any 20-year policies or 30-year policy. And it's not a special risk for insurers. You just keep adjusting your prices to the risk as the risk changes. And you can argue, I sure as hell don't wish it on anybody, but you can argue inflation is basically good for insurance because you get much bigger premiums on much bigger coverages. And that's actually happened in auto insurance. While the autos have gotten safer, and it isn't everybody is driving terribly compared to the way they drive 20 years. The accidents per 100 million miles driven, has gone down a lot. But the price of insurance, auto insurance, has gone up like 30 or 40 for one. And it went up, it was going up at a fast enough rate that the insurance company said, we're not going to give you a 1-year policy, we're going to give you a 6-month policy. If it was going fast enough, we'd give a 1-month policy or a 15-day policy. We are not committing ourselves as to what insurance is going to cost in respect to climate 30 years from now. And it is not a special risk to the insurance industry. Now, people don't get that, but it really isn't. I mean, and we're backing it up with money every day.
Warren, let me just ask you about the economy. We have heard recently from Jamie Dimon in his annual letter at JP Morgan. He says a recession is much more likely now. Janet Yellen was just speaking, I think in the last 24 hours, although it's hard to track from here when things are happening, has just said in the last 24 hours, I think, that the U.S. is in better shape now than it was 6 months ago. Which of those camps would you put yourself in? Well,
I know what a lot of different businesses are doing, and I just got a report from one of them that happens to be in the retail-related business. And in any event, it was minus 22% in February from a year ago. They didn't think that was going to happen.
Sales? You mean
in sales.
Profit? Yeah,
in sales. Profits are down a lot more than that. On the other hand, some of our businesses are still doing fine, but they all are reporting that the new, some of them are living off of orders were placed months earlier and that sort of thing. But it's a tougher world out there in a great many businesses, not in the insurance business. Insurance business should be better this year than last year. That doesn't mean it will be because we can't predict everything that happens, but on a probability basis, it should be better than last year. And the railroad business is down in carloads carried, but it isn't dramatic. And of course, we've got a utility business, and that doesn't really vary much with things. But overall, I think people that run our businesses that do have any sensitivity to the economy are surprised at where they are now compared to where they thought they were going to be 6 months ago. That doesn't mean the world is coming to an end or anything, because 58 years I've been running Berkshire. I mean, we've run into all kinds of problems, but that's what business is about, and we run our business so that we don't depend on everything being big hunky-dory always. We run it so that we will be the last man standing, and that's the way. If millions of people are going to give me their money and tell me to take care of it, we're going to try and take care of it. And if we don't make as much money as we might have if we'd leveraged more or done other policies, so be it.
But you think a recession is more likely now than maybe you would have said 6 months ago?
Well, I think most of our managers would say that they are surprised at where they are now compared to how they thought they were going to feel 6 months ago at this point.
And not
in a lot of businesses, but not in the insurance business, but I think the people at the railroad are somewhat surprised that car loadings aren't a little higher rather than a little lower, somewhat lower. But most of the stuff we carry is essential, but it reflects what's happening. And of course, supply lines were so disrupted and everything a year or two ago that, no economic figures are pure, but I'm just telling you my impression. And I look at the numbers every day. I mean, I look at our Easter sales day by day at the candy store, and I can look at California versus Washington versus Oregon, and I get them the next day. I mean, so I love figures. You can say that it doesn't really do me that good to be such a figure nut, but I just like them when I see them.
in terms of the potential for a credit crunch coming through what the banks are going through right now, there's been a lot of speculation about what that could mean to the economy. Is it going to mean a 0.5% hit to GDP? Is it going to mean a 1% hit to GDP? What would you guess?
I would say that I've been in business running Berkshire for 58 years, and I've never found economic forecasts of any use to the company. And all we have to do is keep running every business as well as we can, and we got to keep plenty of cash on hand so that people can keep making intelligent decisions rather than those forced upon them. And that's all we know how to do. And if I depended in my life on economic forecasts, I don't think we could make any money. I don't know how to do it. And people want to get them, so they get them, but it doesn't. It has no utility. When I find one of our companies has hired somebody to tell them what's going to happen in the economy, I mean, they're throwing the money away as far as I'm concerned.
All right, so you had 120.
Other than that, I'm very tolerant.
Berkshire had 128 billion almost in cash at the end of the year.
Cash and treasury bills.
And treasury bills.
And a bit in money market, government bond only, money market funds. But we don't own commercial paper, and we didn't in 2008 and 9. We want to be ready for anything that happens.
Do you have more or less now? Where are we? 3.5 months later.
Yeah. Well, we laid out, $7 billion plus in terms of the pilot, and we spent $4 billion buying in stocks. So that's $11 billion that's going out the door. But we'll know the figures and exact. But I think we're probably up on cash and treasury bills. Yeah.
Just because more keeps coming in.
The money comes in every day, we earn in the neighborhood of something over $100 million a working day, and a little less than that for all calendar days. And that money comes in, and we spend the money that we had for depreciation. We don't talk about EBITDA or anything like that, a crazy thing, but we have a lot of money coming in, and the float grows in insurance, and we'll continue to have a lot of money coming in, and we'd love to deploy some of it. We also want to have enough money around so that the worst can happen, and we're looked at as an asset to the United States recovery rather than something that caused the problems of the economy.
And would you say you're doing anything differently at this point, just in terms of, all right, you're not going to worry about economic?
No. We haven't changed. We don't change what we're doing in terms of trying to improve the railroad or what. They don't want to. I don't want to give economic forecasts to our managers to how they run their business. I just wanted to make sure that they have happy customers and that they're cost effective and that they behave good citizens, but that they ask me and before they spend a lot of money in terms of capital allocation.
Warren, if you don't mind, we're going to pause here because we do have that big CPI number coming up. We're going to have more with Warren in just a little bit. We were listening intently to all of that. Warren Buffett is standing by too. Warren, what do you think?
Well, Becky, on Good Friday, I was working. Mark Millard, who handles all the bonds and stock trades for all of Berkshire, was there, and I knew I was leaving town on Sunday night, and Mark says, "What do we do next week?" And I said, "Here's what we do." And on Monday, we always buy Treasury bills. We bought about $2 billion of them. We got a 4.99% bond equivalent yield, but the only question is whether we buy 3 months or 6 months, and I tell him use his own judgment on that. So Monday, I was here, and he sends me a sheet as to what we did, and I don't change anything. Tuesday, he does the same thing, and net, we happen to be a net seller of $300 and some million, but we could have been a net buyer of $500 million in stocks, and I am not going to. I'm going to be traveling tomorrow, he's going to be operating on Wednesday, and I'm not changing any instructions to him. He's going to keep doing what he's been doing. I mean, we don't make our decisions as to whether to own part of a company for the next 20 years, we don't have any idea what anybody's going to do next week or next month. And when I was buying Berkshire between 1962 and 1965 of control, it didn't really have anything to do with it. All kinds of things were happening in the economic markets all the time. But we haven't changed our course, in 58 years. And we just want to buy good businesses. We want to buy people we like and trust and at a decent price. And we'll keep doing that. And we'll keep buying Treasury bills every Monday. And we haven't missed a Monday yet. And we keep all our money short. And we keep it in Treasuries. And we were getting 4 basis points, which was $40 million on $100 billion worth. And now we get almost 5%, which is $5 billion. So we've got 100 times the earnings. But it doesn't make any difference. I mean, that is there to be the strongest company you can imagine, and also to take opportunities when they come along. But Mark, if you're listening, just keep doing the same thing you were doing yesterday and the day before. and I could go away for a couple of weeks, and I would tell them, here's what we want to do on the buy side, here's what we want to do on the sell side, and just keep doing it. And that's what we do. And some periods, there was a period about a year ago, I mean, when incredible volumes were. We bought 20% of a company that already the index funds owned, 25 or 30%, Dodge and Cox owned 10%. We bought 20% of a company in a month or something like that. Now,
Accidental, is that?
Yeah, it was accidental, and we were doing other things too. But now it's a different kind of market, and we can't acquire it the same if we're buying an accidental or if we're selling something else. But we'll just keep doing that. That's what we've been doing for 58 years. And I can't tell you what the Fed was doing when I was buying Berkshire day by day or week by week or month by month or year by year. We were buying Berkshire, and and we've kept buying things. And we don't make stock market guesses, and we don't know how to profit by looking at broad statistics and guessing what stock markets or bond markets will do.
But you have said that you do pay attention to interest rates, and that interest rates are like gravity on equity prices.
There's no question about that. I mean,
so where's the level of gravity? Are we on the moon? Are we on Earth?
Well, we're in a way different position than we were when essentially what the option was to get 4 basis points on bonds, and that changes the value. It changes the value of real estate, changes the value of equities. It changes everything. But that's all happened in my lifetime, various ways, all the way up to a 21.5% prime and down to 0, which nobody thought we would ever get to. You can read the economic textbooks of like Paul Samuelson, a wonderful man, and it's a 900-page textbook that every kid went to school with, and you look for negative interest rates in the index, and there's not a word on it. So anything can happen. And we're prepared for anything, but we like to do things. Over time, we want to buy good businesses. It's that simple. And we always want to have money.
Andrew's got a question, too. Andrew?
Hey, Warren, this is actually a question that sort of moves where the economy may go. And it's a question around technology, which is, I know, a space that you don't always want to go to. But I also know one of your best friends is Bill Gates. So I'm curious if you guys talk about it. We keep talking about ChatGPT and potentially how that could transform AI, how that could transform our economy in the future. And obviously, there's also lots of questions about whether AI is dangerous and we have the right policy set around it. And I was curious if you've given much thought to any of it.
Well, I think it's something I don't understand at all. But Bill did come by about, 4 or 5 months ago, and he said, I'm going to show you the latest thing, what can be done. And then he, I actually said, take the song My Way and write it in Spanish, and have it encompass wide views on what's funny or what's likely to happen in the economy. And 2 seconds later, it comes out that rhymes and does all these wonderful things. But he told me, he said it can't tell jokes, which I thought was very interesting. It just doesn't know how to tell jokes, but it can tell you. It's read every book, every legal opinion. I mean, the amount of time it could save you if you were doing all kinds of things, it was unbelievable. But what I said to Bill is, I said, just let me know what I can ask. How are you going to ruin the human race? And then let me know someone unplug it or whatever I have to do at that point. And of course, I'll be programmed so that nobody thinks they should unplug it or something. So I don't really understand it. I think it's an incredible technological advance in terms of showing what we can do, but I don't know whether we know what happens. And I was listening, who was it the other day who knows a lot about technology? He just says that, it scares him. Well, if it scares him, it scares me in terms of the possibilities of it. I mean, we've done amazing things, like we figured out how to create an atom bomb back in 1945. I didn't know what an atom was or anything, but Einstein told me it was going to change the world, and it changed the world. So I don't want to change the world too many times without having some idea of the consequences of it. And I think this is extraordinary, but I don't know whether it's beneficial.
Was it Steve Wozniak?
Pardon me?
Was it Steve
Wozniak?
No,
it was Eric Schmidt. And
yep.
Eric was saying, we don't know where this takes us, and maybe we ought to pause it for a while. Well,
right.
I don't know 1/100th of 1% about physics or anything else that Eric knows, but I come to the same conclusion.
Right. Look at you, Warren, watching Squawk Box from Tokyo last night, it sounds like, because Eric was on talking about that on the broadcast. One other question for you, Warren, because we always ask you, I don't know if that's where you were watching it, but he was talking about it just yesterday with us. But separately, we always have a Bitcoin question for you. But I've been thinking about. Okay, I was thinking about this with you, Warren, and I know your views about Bitcoin, and I've been very surprised at how Bitcoin's come back up to close to $30,000 again. When you go back to the Tulip Mania went from 1634 to 1637, only lasted 3 years. And here we have, if you're right about Bitcoin, something that's now lasted something along the lines of 15 years. And so I've been trying to understand if, in fact, you're right, and this is not just rat poison squared, but is not a thing, when it would be unveiled as not a thing.
That's predicting when speculation will end, or when the gambling instinct will go away, and when more people want to get out than are getting in. And I have no way of. If I thought I was good at that, I'd figure out a way to make a lot of money and different things. All I'm trying to do is buy good businesses. But the one thing I know is I didn't like chain letters when I was a kid. I thought, why in the world should I send along a chain letter to the next guy when I could start my own? I mean, I've seen people do stupid things all my life, and I really. I empathize with that. I mean, people like to play the lottery. They're going to get 60 cents back on the dollar or whatever the number may be. And states, essentially, the numbers racket was something that you avoided. And then the government decided it was a source of revenue. And it's very hard to tell people that if they're going to put a tax on essentially a sure loser for society, for the gamblers on the lottery on the whole, but they're appealing to the gambling instinct, and it spreads. I mean, people love the idea they're going to make more money tomorrow, and it really drives them crazy if their next door neighbor is making a lot of money not knowing what they're doing, and they're just sitting there, and their spouse is saying, why is that guy getting a second car, and why are we missing this whole thing? And the gambling instinct is so strong, and you had millions of people that were getting checks in the money and sitting home and finding out that they could have a roulette wheel in their house, and they had all the appeals of gambling that are used to get people to go to Las Vegas, and you can do it in your home, and they had money, and we've had an explosion of gambling essentially, and I like to bet on a football game if I'm sitting and watching. It makes it more interesting, but I don't think I want to make a living trying to bet against the house ever. I want to. If I were to get into gambling, I would want to own the roulette wheel and not be a roulette player. But we haven't done that. But but people all the time. Well, actually, on my honeymoon, in my first marriage, we're talking when I was 21, and we went through Las Vegas population of about 20,000, a bunch of fellows from Omaha and other places that bought the Flamingo after Bugsy Signal met his maker sooner than he expected, and they welcomed me in because they all knew my Uncle Fred. And I looked at all these people who had flown thousands of miles to do something unintelligent as fast as they could. I mean, they couldn't, they thought the dice were hot or something like that. And I thought, I'm going to get rich in this country. I mean, if that's what people do, I can be smarter than that. I mean, so I've watched it ever since, and it's fascinating to me. But the gambling urge is so strong throughout the world, and now you've created the perfect condition for it, where states are legalizing gambling, and what it does to football games. I mean, particularly you're just point shaving, which the guy gets offered $1 million, and it's like the White Sox were back in 1920. They did it for a few $100s, and you aren't even throwing the game. I mean, you're just making sure that the spread is met. You're not going to change the gambling instinct, but when the state has started sponsoring it, it's given a different there's a different climate than before.
You think that the idea of this legalized gambling and it's spreading in the states and everything that's happening right now, you think that's changing the games? You think there are situations where the spread's not going to be made and it's because somebody is doing it, they've been paid
Well, I think
off?
everybody in the country spent all their time gambling, flipping coins against each other. Somebody would win 20 times in a row, every, million times or something like that. You have 330 million people doing it. You've got 330 people that have called the coin flip correct or something. I mean, the urge to participate in something where it looks like easy money it's a human instinct which has been unleashed. It's always there. I mean, and when my dad was in Congress in the House office building, I could go to the elevator and yell "Sammy," and the guy would come up to take numbers bets, which were illegal, on the fourth floor of the House office building. It's people love the idea of getting rich quick. I don't blame them, but I've always wanted to get rich slow, and I have a lot of fun along the way. But I'm not immune from it. I've bet on football games. I made one wager at the sports book in Nevada, and I was out there with a couple of friends, and I went up and bet on Nebraska against it. And about 10 people got up behind me and said, "I'll have what he's having." It's got like Meg Ryan in the movie. And so they had a very unbalanced book when they got through that day, and I got 500. My 550, and I made a profit of 500 on it, and I had somebody else cash the tickets. So it's so human, and once unleashed, you can't put it back in the bottle. And something like Bitcoin, it is something. It's a gambling token, and it doesn't have any intrinsic value. And Larry Summers was on a week ago and said it doesn't have any value. I mean, it doesn't have any value, but that doesn't stop people from wanting to play a roulette wheel and think that if there's 37, 1 0 and or 00, and it doesn't make any difference. Yeah, it makes a difference, and it's just a question how fast it eats up your money if you spend the rest of your life spinning around a roulette wheel. But they feature the winners, and people get excited about it, and that's why the slot machines make a lot of noise when they're paying out. I don't know how to turn back the clock on that.
Let's talk about some investments that you have placed wagers on and maybe switched your wagers. Taiwan Semiconductor is a stock that showed up in Berkshire's holdings in a big way a couple of quarters ago, and then a quarter later, most of it was gone.
Yeah, that was me. That wasn't one of the two other guys. There's two other people that make decisions. They each run about $15 billion, and sometimes they get confused with me. They said Buffett's buying this or not, and it's one or two other guys. But that was my decision, and I think Taiwan Semiconductor is one of the best. Well, it's the best in that field, and is one of the best companies in the world. It's a fabulous enterprise, and Apple buys a lot of the products from them. I mean, they're good, and they're coming to the United States, and we're actually, I think, maybe even building for one of our subsidiaries, helping build facilities for them. But I do think that there is a danger there to some. I don't have any idea. There's actually a danger of seismic action. I mean, and where they're located, but that's a low probability. And they're smart people. But would I rather have it that was a U.S. domiciled company than be a subject of who knows what, depending on conditions outside their control? I'd rather, I reevaluated that part of it. I didn't reevaluate the business, the management, or anything of the sort. It is a fabulous company, and
you reevaluated the geopolitical risk from China stepping in to Taiwan.
Yeah, I think there isn't any question that conditions change. I just don't know what the results of conditions changing. I mean, China and the United States are going to be superpowers, as long as your children live, and they will always compete with each other, and they should, and you can't let it get out of control, and you can't have accidents and all sorts of things. I mean, it's a dangerous world.
If you're concerned about China and what that might mean for Taiwan Semiconductor, are you worried about what it would mean for your largest holding, Apple? Because Apple does so much of its business there, both in terms of manufacturing and sales.
Well, I weigh that in, but Apple is, if you're an Apple user and somebody offers you $10,000, but the only proviso is you'll never be able to. They'll take away your iPhone, and you'll never be able to buy another. You're not going to take it. If they tell you if you buy another Ford Motor car, they'll give you $10,000 not to do that. You'll take the $10,000 and you'll buy a Chevy instead. I mean, it's an incredibly valuable utility. That doesn't mean that it can't be misused by kids, and Tim Cook cares about that. I mean, everything can be used. Fire can be misused. I mean, but I think that Tim Cook is one of the classiest CEOs. I mean, he understands the business, and he has a product which Steve Jobs basically invented, but Tim Cook has managed that company in an extraordinary way, and I love, we've got 100 and whatever we got. We've got 900 million plus 915 million shares actually, and but people say, well, isn't that a lot of money to have? Well, we've got a railroad worth a similar amount. We've got a utility business worth a similar amount. I mean, it's a wonderful business. How the hell could we can't develop a business like that? And so we own a lot of it, and our ownership goes up a little bit every year because they buy in their stock, and Tim does not issue it; he buys it in, and we love it.
Meaning you're not selling any Apple shares?
No. There was one period actually, from a tax standpoint, it was a good idea to sell some. We sold some at around 115, and it was a dumb sale. I mean, in the end, we could sell the tax situation some other way. And we actually bought a few shares last year. We got a few more shares when we bought Allegheny Corp because they had some of the portfolio. I only kept two stocks they owned, Berkshire Hathaway and Apple. They happened to own. They had 27 stocks or something. They're all gone except for those two. So we will never own a business that makes so many people happier and useful for them. And, you probably got 20,000 photos up there. And Apple what Steve Jobs did with that, and other people can do other technical things. And I don't know whether when I look at my iPhone, I don't know whether there's some little guy inside that's doing things. I don't know the technical aspects at all, but I know that at the Nebraska Furniture Mart, if we don't have the Apple product, people leave the store and go someplace else. And I've just stood there and watched people and talked to the people that sell our various products at the Furniture Mart, and whether they're old, whether they're young, whether they want to have it, and lots of people have multiple products. They've been come up with just one little addition after another, and who knows what they come up with additionally. But Tim Cook has managed that business. One of the greatest managers, obviously, in history.
Let's talk about another company you own that has a major China presence. In fact, that's its only presence, BYD, right. The electric car company that you've owned for a very long time. You've been selling some of that. Why?
Yeah, well, we've been selling it because the companies are interested in it's being valued at, I don't know, well, the interest we had is being valued at, $6.5 billion, whatever it may be. And I think it's an extraordinary company. And I think the fellow that runs it, who's run it right along ever since we purchased it, 14 years ago or something, is an extraordinary person, been over there. But I think that we'll find things to do with the money that I'll feel better about. But we haven't sold our BYD by a long time. We're not in a hurry on something like it, but my job is to allocate the capital and within Berkshire Hathaway the way I would do it for my sister, because she is a big shareholder, and that's the way I feel about all the millions of shareholders we have.
Very quickly, can I just ask you about Paramount? That's another Berkshire investment that's been a relatively new one. Is it because of streaming? What happened?
Streaming, that is not really a very good business, and the people in entertainment have made lots of money. The shareholders really haven't done that great over time, and it's applied to many. It's a glamorous business, and I had some friends in Hollywood, and they look for pigeons, and they find them. I mean, it's like it attracts people, and
you mean suckers?
It's a great way to meet girls, for all I know. I mean, but it isn't fundamentally that good a business, whether it was producing movies and you've got some people that have got deep pockets that aren't going to quit, and the product they're offering people a chance to watch all those movies, for peanuts and all that. But can they raise prices? We'll find out. But so far, they haven't been able to. They've been able to attract subscribers, but they attract them at a terrible price.
All right, you gave a whole lot of reasons why not to buy Paramount. Why did you buy it?
Well, we'll see what happens.
Warren, you are known for somebody who has the appetite and the taste of a 5-year-old. You like hot dogs, you like Coke, you like See's candy. Someone wrote in on Twitter and wants to know what you've been eating in Japan. Oh,
that's an interesting question. I have a Coke here, and I had some Hershey Kisses before I came over here, and a few things like that. And I've gotten to 92 with the habits of a 6-year-old, and so far it's working. Charlie's 99, and he doesn't eat any better than I do, pretty much. But I just get more attention with my diet, and I think. I mean, you roll the dice. I've been lucky in life. I haven't really gotten that sick. And the only terrible things happen when people die or get sick that you care about. And if you can make a decent living in this country, it's just been lucky. And I make all kinds of money because I'm good at some game where the crumbs of capitalism just fall off the table. What people contribute to society is not proportional. Somebody that, gives their life, fight in a war that they don't need to get. I always admired Hank Greenberg. He can be a tough competitor and everything in the business, but he lied about his age upward in order to go in the army, and he landed at Normandy. That is really something. So I've been lucky, and you know, I always tell people I found everything I like to eat by the time I was 6. I mean, why should I fool around with all these other foods? I know all these people eat all these green things and everything, but if somebody told me I would live an extra year if I ate nothing but broccoli and a few other things all my life instead of eating what I like to eat, I would say take a year off the end of my life and let me eat what I like to eat. But I don't really think it, because I think happiness makes an enormous amount of difference in terms of, you can't measure it very well in terms of longevity. And I'm happier when I'm eating hot fudge sundaes or drinking Coke or whatever it may, hot dogs.
Well, Warren, we are lucky to have spent the last 3 hours with you. We want to thank you for your time today.
Thanks for inviting me.
You invited us, but thank you. Warren Buffett.